And our core objective here was to actually provide the safest and most convenient access to crypto. In this case, we launched the world's first Bitcoin ETF and the world's first Ether ETF. And I think that our funds have worked flawlessly since day one, even through the periods of the highest stress in the industry. Business as usual every single day from both liquidity and safety and custody of the assets.
My next guest is Vlad Tasevski. He's the Chief Operating Officer and Head of Product at Purpose Investments. Vlad, welcome.
Thank you for having me. Looking forward to our discussion.
You bet. So Vlad, Purpose Investments, for those who are watching who might not know, is the operates the world's first Bitcoin ETF, BTCC. So to say that you're probably one of the best people to talk to about the crypto industry is an understatement. Can you tell me, when did your ETF get funded, and how is it that a Canadian ETF is first in the world?
Thank you. Well, look, I mean, absolutely. We launched the world's first spot Bitcoin ETF back in February of 2021. And that was a result of a sort of long period of work with the regulators here in Canada, with the Ontario Securities Commission, to ensure that we put together a structure that actually meets all of the regulatory requirements for a public investment fund. And we wanted to make sure that we, work with service providers and partners that meet all those key criteria to actually be able to offer a fully regulated vehicle. And I think at some point, and over time, it seemed that our structure seemed very boring and old school. But I think as we have gone through this period of extreme stress in the crypto industry, it has actually proven that being able to use a structure that actually meets all of those regulatory requirements for a public investment fund have actually proven to be very valuable and very important. And our core objective here was to actually provide the safest and most convenient access to crypto. In this case, we launched the world's first Bitcoin ETF and the world's first Ether ETF. And I think that our funds have worked flawlessly since day one, even through the periods of the highest stress in the industry. Business as usual every single day from both liquidity and safety and custody of the assets. So we've been extremely happy with how our funds have done. We have delivered exactly what those funds were designed to deliver, ongoing and safe access to spot price of Bitcoin and spot price of Ether, respectively.
Okay, so is there any latency in the timing between the actual Bitcoin price and the price of the ETF?
No latency whatsoever. These are effectively, the key benefits that an ETF structure provides is to provide real-time pricing against the underlying asset. That has been done now for decades against equities and fixed income securities and commodities. In this case, we effectively provided the same, but now to spot prices of Bitcoin and Ether. So obviously the ETFs trade between 9:30 a.m. Toronto time until 4 p.m. Toronto time. So during that time, the price of the ETFs follows exactly the, second to second price change of the underlying spot price of both Bitcoin and Ether. That's been always the case. And that's why I said it's been a flawless kind of operation and trading of the ETFs with that respect.
Sure. And so the mechanics of an ETF differ from owning the actual Bitcoin in that the ETF, your group, buys the Bitcoin and holds possession or has custody of it?
Correct. So in the case of the ETF, again, this ETF is same as any other ETF that holds regular traditional securities. In this case, the ETF owns Bitcoin, in the case of the Purpose Bitcoin ETF. And then going back to what I mentioned earlier around being able to actually structure the entire, fund meeting all the regulatory standards. In this case, we have a custodian, and on the custody side for the Bitcoin itself, the Bitcoin is custodied with Gemini, and structurally it's custodied in a fully segregated account in the name of the Bitcoin. The Bitcoin is held in cold storage at all times, and the Bitcoin can never be lent out. Is always fully held there in a cold wallet at 100% of the time in the name of the Bitcoin ETF itself. And then Gemini, who is the sub-custodian, they had to meet the, regulatory requirements, which means that what that specifically means is that we deal with their trust company, which is registered in the state of New York. So lots of sort of different levels of processes and regulatory requirements, I guess, to actually establish this custody structure to ensure that the funds, the Bitcoin assets held by the ETF are always held in this fully segregated structure that's in the name of the ETF itself. So never commingled or mixed with any other assets.
Okay, so on November 17th, it was reported that Gemini suffered a $485 million rush of outflows. And so, how does that affect or put at risk any of the ETF's funds, or does it?
Well, it does not, and that's actually going back to the structure because I mean, any potential, I guess, rush, as you mentioned, that Gemini might have had, that was what was announced in the public. There was sort of a different line of their business. There was sort of structured in a very different structure. Our Bitcoin assets that are custodied with Gemini, those are again exclusively within their trust business, and again, those accounts are always fully segregated only in the name of our purpose Bitcoin ETF. And those assets can never be used for any other purposes by Gemini. So therefore, it's important to actually be clear here that that event had no impact on the assets of the purpose Bitcoin ETF held by Gemini because they're always fully segregated and they can never be used for any other, business line by Gemini. That's always been the case since day one. And therefore, that November event that you just referenced really had no impact on the custody of the assets of the purpose Bitcoin ETF with Gemini.
Okay, so the 800-pound gorilla in the room question that everybody wants me to ask is more or less, so what happened at FTX could never happen to a investor in the Bitcoin ETF.
I mean, look, that's correct. And I think that the other thing, I mean, with FTX is that the extremely unfortunate event with FTX was obviously a really bad event for the crypto industry. And also that was done by a deliberate act by specific actors, potentially highly criminal, which we will see over the coming months. And also the third thing is that FTX was not regulated, right? So all of these factors were really contributing to the unfortunate events with FTX. In our case, we're working fully within the regulated sphere, both in Canada and in the US, where Gemini is registered as a trust company. And then also in this case, we fully work on a fully segregated basis in terms of the fund's custody holdings. Within FTX, there was no segregation. Clients' assets were always commingled, unregulated, no oversight. So none of those adverse factors have ever been present in our custody structure with Gemini.
Mm-hmm. Does the events of FTX and Luna and all of the other sort of negative press that Bitcoin's been receiving and the whole crypto universe as a result, does that pose any sort of existential threat to your ETF because of a lack or an absence of public trust?
I mean, we don't believe sort of an existential threat in terms of the operations of the fund. I think that where there's always a threat more broadly for the industry in terms of if investors who are invested in the space, they effectively at some point decide that they actually want to move on, and therefore broadly the investor interest will meaningfully diminish, and therefore I guess what that would mean in our case, where investors will actually start pulling out of the fund and actually going elsewhere. So therefore, if at some point the fund's assets became so low where it became uneconomically for us to operate the fund, so that will be kind of that scenario. I think what I would say is that what we have seen in the periods of high stress, even beginning almost a year ago, there was a sort of a market sort of pressure on the prices last November. Then in May with the Luna Terra and 3IC, and then now in November. Throughout the entire period, actually, we have seen extremely strong resilience by the investor base. While the market prices have dropped, actually for the year, the shares outstanding of the funds are either same or even increased. So from that perspective, we have seen that the investor base has been able to tolerate, obviously, the ongoing price volatility. And that for now shows that they're still convinced of the future potential. But again, our key objective here is to provide that ongoing, safe, and liquid access. The investors in the end will determine whether they want to stay in, invest more, or move on to other investments. But our key objective is to actually provide that safe and convenience of access.
Sure. And has the ETF experienced an increase in withdrawals or redemptions since these events?
No, so I mean, we have seen actually, as I said, I think the funds kind of flows have been either flat or slightly net positive, both across our Bitcoin and Ether ETF. So, which kind of shows, I guess, resilience from an investor point of view broadly across our investor base. We will see how that behaves going forward, but I think we are there to actually provide that kind of core benefits of ongoing liquidity and safety and custody of the assets.
Okay. What does the management fee structure look like for the ETF as an investor?
Yeah, absolutely. So we provide a management fee of 1%, and then the total expense ratio is capped at 1.5%. That effectively would then include the expenses around custody, audit, and other operating expenses. But they are capped to actually not exceed 1.5% on an annual basis. And those are accrued on a daily basis. So effectively, on a pro rata basis, every single day, we would accrue that total cap of 1.5%, right? And effectively, that also means is that unlike where investors can access crypto elsewhere through including buying directly, the benefit that we provide also is that we get institutional level of execution costs that are much, much lower when investors individually purchase on different trading platforms where they actually pay much higher execution cost.
Okay, so sorry, just for clarity, the 1% management fee is in addition to the 1.5% expenses or included in that?
Yeah, it's actually included, right? So the all-in expenses are capped at 1.5%, and that includes the 1% management fee. It's all inclusive 1.5%.
Okay, Vlad, that's been very helpful. I really appreciate your time today. Thanks for joining me. Hope to have you back soon.
Thank you very much.
You bet.
Talk to
Bye
you
for
soon.
now.